Well, let's now turn to SMSFs and what we're seeing in that space, what you should be considering. Liam Shorte joining us from Sonas Wealth. Liam, Happy New Year to you. Great to have you back on the show as we enter 2025. I guess before we consider what is ahead this year, most immediately, of course, is the inauguration of Donald Trump. Well, what should you consider, do you think, particularly if you are in an SMSF, and the so-called Trump effect?
Yeah, well, I'm just telling people to have some money put aside because he's one person who can say something on one day that can move a market 5 or 10%. So, there may be opportunities over the next year or two to get into some investments at when there's a dip. And that's, if you're a long-term investor, you're always looking for just that opportunity, for a little dip in the market to get in at a little bit of a discount to what you expect longer term.
All right, so as we enter a new year, what should you consider? Perhaps time to review your super contribution records, for instance.
Yeah, so this year the concessional limit is 30,000, so that's including what your employer puts in and what you can salary sacrifice yourself or put in as a deductible contribution. So it's just important to remember and check if you've had a pay rise, has your contributions gone up from your employer, to make sure you stay under the 30,000 limit. But also if you've got spare money because of the tax cuts, or you've got some savings, then it's an ideal time to get some guaranteed savings on your money by putting it into super. For somebody on say 80,000 a year, if they can put $1,000 into super, they're guaranteed to save themselves about 17 to 19% tax without any risk. So it's a great way of just getting some in a volatile period to get some guaranteed savings, and also to look and see whether you've used your unused contributions for previous years. So this is really important for somebody who's thinking of selling a property. So if you're selling a property, always look at ways of minimizing the capital gains tax. And one of those ways is that you can use the 30,000 limit for this year, but if your balance is under 500, you can look back 5 years and use some unused contributions as well. And that part of your capital gain then is only taxed at 15%. So it's important to look at your options. There's only 5 months till the end of the year. So, a lot of people don't have lump sums. So it's often easier to drip feed through from your fortnightly salary or monthly salary.
Oh, goodness, the way you put that, only 5 months ago until the end of the financial year, comes up quickly, doesn't it? Liam, what else do you need to consider then? Particularly, you said perhaps you should be aware of Centrelink coming knocking with an update on your income streams.
Yeah, so a lot of people are used to getting letters from Centrelink in the post, but they'll find that when they were on myGov over the last year or so, in a lot of cases, they triggered the move from receiving a physical letter in the post to receiving it through the myGov system. So what I've noticed over the last couple of months is anybody who's got an SMSF, they're always required to update their income stream schedules from their pensions in their SMSF before the 30th of December. And I'm seeing a lot of people miss the notices from Centrelink warning them about it. And, I've had a couple of people who had their age pensions cut off over Christmas, not realizing that they'd missed the deadline. Oh. So it's important that you always log into the myGov system fairly often, and don't ignore the text messages that come from myGov telling you to check. The problem is people don't trust text messages anymore, and they were blocking the number, so they weren't getting the notification that the letter was coming through from Centrelink into myGov.
So, well, that's a bit alarming if you lose your age pension because you haven't sort of had those updates. How difficult is it to get that back online then?
Well, if you can get the information into fairly quickly, they'll restart it. But otherwise, once they've stopped it, you'll have to do a full application all over again.
Now, Liam, of course, there's been a lot of speculation about legislative changes, particularly as far as super is concerned. And you'd expect this is only going to ramp up as we head towards the federal election. What are you looking at?
Yeah, look, I just came back from holiday, so I just started reading, and straight away I've heard this one from the coalition where they're thinking of moving the super guarantee, instead of letting it go up to 12%, actually moving it back down to 9%. So that's one they're pushing it out there to see what the reactions are going to be. And we already know the coalition are very much in favour of allowing people to take more money out of their super to pay for a home or to pay down their mortgage. So that's something which, if the election gets close, you'll start seeing things like that ramp up to try and attract those sideline voters who are not sure. But the idea of being able to get some money out to pay off their their mortgage they think is a great idea. Look, we're always really worried about that because the beauty of the superannuation system is the compounding growth over the long term, and taking a little bit of money out in your 20s or 30s could really affect your long-term retirement. So everything's got its pros and cons, and all I'm saying is don't react to the promises or the what's offered as we go up to the election. Superannuation is still going to be the safest place to put your money tax effectively for retirement. So don't have a knee-jerk reaction that you can't trust the system anymore or anything like that. It's always going to be more attractive than saving in your own name for the long term.
Well, I mean, if you are worried about the volatility, particularly in the lead up to the federal election, or also even the Trump effect, which we spoke of, what of annuities? What do they offer?
Yeah, so annuities are what I use as a second option for instead of bonds or term deposits, and they're issued by life insurance companies. So the beauty of them is that they're not subject to the government guarantee. So the life insurance companies have very strict legislation on how they treat the money that they receive into these annuities, so they're very safe. But the idea is that you can lock money away on short-term annuities for 1 to 5 years and get rates that are similar, or even in some cases a bit bigger, or a bit better than term deposits. So at the moment, I'm seeing term deposit rates for 2, 3, and 4 and 5 years are dropping below the 4.7 mark. But I'm seeing that there are still annuities available from the big providers like Challenger and Resolution Life and Combank. You're still looking at 4.7 for 2 to 3 years, 4.8 or 4.9 for 4 years, and even a 4.95 for 5 years. So that's 4.95% every year for the next 5 years. So if you're somebody who's worried about what's happening with Trump and what's happening around the world and volatility, you're worried about rates dropping, it's a great option to just lock in that part to be able to pay your pensions over the next 5 years.
Now, Liam, we have often spoken about the need, of course, for a will. What, though, and perhaps when, should you consider an enduring power of attorney?
Well, the problem now is we've got the privacy laws now are so strict that if you're trying to deal with any organisation on behalf of somebody else, you're going to have an enduring power of attorney in place. So I believe everybody over the age of 18 should have a power of attorney in place. And what it does, enduring power of attorney lets somebody step into your shoes for financial matters. Now, you've always got to be aware that it's also one of the areas of abuse that people are worried about. But, for example, I had a client who was transferred overseas for a few months to do a project. During that time, they wanted to sell their property in Australia. Their wife was still here. But because it was in joint names, both of them had to sign. So there was this race to get documents expedited overseas, and then suddenly it had to, there was other documents that needed to be witnessed. So he had to get to an Australian consulate. It was an absolute nightmare. If he'd organised the enduring power of attorney in advance, his wife could have acted on his behalf and her own behalf to sign the contracts. And it's always smart in New South Wales to lodge those powers of attorney with the land and property titles as well. But if you're going to help anybody in your family, like a parent or one of your children if they're traveling, it's important that you have the enduring power of attorney. And one of the things we're finding now is a lot of the banks are requiring that you and the person giving you the power of attorney actually physically turn up in the bank to start with to put the power of attorney in place. Now, the last thing you want to be doing if your mum or dad are in hospital having an operation, or your partner's having an operation, is to try and figure a way of getting them out to a bank to prove their identity. So these things should always be done in advance. And as I said, they're not for older people. These are things that everybody over 18 should have at this stage. And for SMSF trustees, it's essential to have one in place.